Hey guys, you've joined us live on Moneycontrol. I'm Manisha Gupta, and it has been a good day for many of the commodities. It hasn't been a great day for other asset classes where you've seen a decline in equities and even the dollar index, by the way, which has been a flight to safety the last couple of years when we saw COVID and the war and the recession fears as well. But right now, while the markets are quite uncertain and we seem to be reacting to a lot of economic data, there is still a lot of economic data to come yet. The US non-farm payroll data has come in hotter but less blistering in what we saw in the month of January, so that's a bit of a support really. But you have the US inflation numbers, the CPI data that comes in on Tuesday, and this is the last important economic number ahead of the US Fed meeting, which is on the 22nd of March. So the metal prices have seen some support coming in here. If you look at the prices, the weakness in US dollar has been the major reason here, and then the US Fed perhaps will be less hawkish when we see the US Fed meeting coming in. Until now, there was an 80% probability of a 50 basis point rate hike. This was until last week, but this week today there's a 70% probability of a 25 basis point rate hike. So clearly tables seem to be turning here with what's happening in the international markets. The banking collapse concern really seems to have led to buying coming in for the tangible commodities. So the gold prices are trading at a 4-week highs after hitting a low of $1,810 per ounce. We saw a high of $1,890 per ounce. So it's been an $80 to $90 of a jump up in case of gold prices. Silver is trading at a 2-week highs as well. The US banking crisis has pushed, as I said, a hawkish stance sentiment into the markets. But not just precious metals, the industrial metals seem to be doing well. You have steel prices trading at an 8-month highs. Iron ore is trading at a 7-month highs as well. Apart from the macro, it also has to do with China, which is now pushing for stronger demand. The improvement is higher because from next quarter onwards, this is what is going to be the peak infrastructure demand, construction demand. So that is supporting the kind of stocking that China markets are doing. And then China mostly is set to announce another stimulus measure going forward, which will support construction, infrastructure and consumption, and that has been supportive for metals. So take a look at copper, and we are back above $4 a pound onto this one as well. As I said, it is going to be the US inflation data that comes in tomorrow that will give you a further direction. But at this point in time, the way we are trading for many of these metals, it still is a good opportunity to go long here. Once the data comes, it's going to be choppy ahead, and after that as a knee-jerk reaction. But at this point in time, the limited trading period that we have in front of us, it does look that metals could perhaps continue to outperform various sectors.